With a pretty solid market run and a very good June, do you still see value out there? And if so, where?
Sure. We are cautiously optimistic longer term, although we do expect some volatility in the shorter term to do with earnings, the G20 that was just mentioned, and the Fed. However, we do still see some opportunities around the market. Specifically, we still value a balance between value and growth. So companies that have strong balance sheets, cash flows, good management, that have pricing power. And we see some of those still in technology and in REIT sectors.
Michael, same question to you. With this kind of a market run, record highs, the Dow close to a record high, where are you guys at Vios seeing value?
Look, a lot of our clients are focused on wellness, and whether it's financial wellness or whether it's getting healthy. So we're looking at the pharmaceutical sector, especially people are looking for yield now with the 10-year close to 2%. We're looking at a company called Bristol Myers. As everyone knows, they are
a little company called Bristol Myers. Yes, I know them well. Stock's down, I think, 11% this year.
It's down 11%. They're trying to work out the Celgene purchase for the cancer
Which
drug.
A lot of people did not like. They suggested they may have overpaid for Celgene.
They may have. Looking at valuation, though, they're only trading at 10 times next year's earnings. You're getting a 3.5% dividend yield when people are looking for yield, and they continue to look for wellness. We have a demographic that's more dependent on pharmaceuticals than they ever have been. And so we think that space, and specifically Bristol in that space, has a lot more room to run after this all shakes out with the merger.
Yeah, I mean, Linda, we looked there, and as well, pharmaceuticals, we saw that deal yesterday, obviously, AbbVie buying Allergan. Do you see any value in the healthcare space? One that has really, until kind of recently, lagged the market along with energy.
Absolutely. Healthcare has lagged the market this year. However, in the shorter term, it is going to be clouded by political issues with Washington, drug pricing, and headline grabbing, presidential hopefuls. But longer term, we agree. I mean, the structure of the population is such that it's growing older, and it needs more healthcare. So longer term, over the next decade or so, absolutely. But in the shorter term, there could be some volatility. But having through the same growth rate, kind of the same concept, is kind of REITs, where it does have the dividends that investors would want, but also maybe the data centers are tied to more structural growth through technology, cloud applications, more data need for companies as the economy grows.
Financials. JP Morgan Chase, a name that you and I, Michael, have talked about a few times. It gets a lot of attention in the big banking sector. Jamie Dimon gets a lot of attention for obvious reasons. You're still seeing a lot of value, too, in JPM.
Yeah, look, we haven't seen the impact of the tax overhaul yet. That is going to help those banks, especially the big banks. They're making more money than they've ever made, and the red tape is kind of moving away.
Yeah, but they say that, these bond yields we talk about, these lower rates, great for homeowners, great for home buyers, bad for banks, which want to have that net interest margin expand a little bit.
The net interest margin will expand at some point, but look, people are still buying bonds. They're still buying anything to do with a bank. They're still coming to you for a mortgage. They're still investing in a CD at your bank. You're still getting interest, and you're getting interest on a bigger pie.
Linda, we've talked a lot about a little company you might have heard about in China called Huawei, and we know about the ban. Is Huawei's ban and their pain Cisco shareholders gain?
Well, Cisco already came out in the first quarter and essentially took China out of its earnings estimates for the rest of the year. But Cisco more broadly is returning 50% of its free cash flow to shareholders, in addition to benefiting from more communication, data needs, more infrastructure changes that is occurring through the whole industry. So Cisco is much more of a structural, longer-term play with essentially de-risked out of China because of their guidance in the first quarter, and valuation continues to be supportive at around about 16.5 times.